Good afternoon, everybody. Christian here. Today I'm going to be showing you a trading model that I'm going to be using in the upcoming videos that I'll be sharing with you. I'll give more explanation on what's going on and why it's going on and all that stuff at a later time. Right now, this is just a video to show the model, the trading model that I'm using, and I do tweak it from time to time and try to refine it always. I think as a good trader, you're constantly looking for ways to cut your losses and increase your winners. So this is just what I'm using at the moment, and let me walk you right through it. Basically, what we have here is an intraday chart. This is a 10-day, 30-minute. That's the time frame that I like to trade on. It gives me enough pips to the upside or downside to make enough money that I think it's worth my time. It doesn't take forever. When I'm looking at the daily chart, 1 year daily or something like that, that there seems to be, it's just not fast enough for me. It doesn't keep me interested. But this does, so I like to use this particular one. Also, the losses get cut a lot sooner on an intraday chart than they would on a daily chart, so my losses are smaller, and that just kind of makes me feel better psychologically, and so I prefer this model. On the chart, I have some basic settings. I have the candlestick formation. I think it's a candle trend. I also have these short-term moving averages on here. I don't remember exactly what they are. A 7 period, a simple moving average, a 9 period, and I think it's 11. All right, and I have these set where they're at because I'm trying to capture a particular thing. On this chart, you'll see that there are two basic stages that the price action moves in. It's either in an impulse move to the upside, or it's in a correction mode. And whenever I'm looking at a move, I'm hoping to capture some impulse, either up or down, and that's going to be where I'm looking to make my money. When price can't stay above these short-term moving averages, it starts to fall back into them, especially if it falls out of them, then I know the impulse move is over, and I don't re-enter until I see another shift in direction, and then I would say, okay, this is a potential opportunity to get long again. We might be seeing another impulse higher, and as long as price respects that series of moving averages and stays above it, then I would go ahead and continue to stay with it. And when it falls back through it, and I say, okay, that's the end of the impulse move. You could look at this another way, and we'll talk about that in a little bit, but basically that's what these short-term moving averages are there for. I used to use these short-term moving averages as my buy and sell signals. There was a problem with that, and so in this case here, it will work just fine. You close above those short-term moving averages, you want to get long, and that would make you a lot of money. When it closes below it, you want to sell, and then you make some money that way. When it closes back that direction, that I would start buying. The problem is that when you get in those consolidation phases, the price action whips back and forth across those moving averages again and again, and you were just getting whiplash back and forth. You're getting chopped up in the chop, where you're getting buy signals, sell signals, buy signals, and that doesn't really work too well. So instead, I don't do that anymore. What I do instead is I first start by analyzing the chart from the structure, and that's going to be with the 50 period moving average. It's my first moving averages on there. 50 simple period moving average, very simple, and then the 200 period. You could put the 100 period on there if you wanted to. I don't see price action really interacting with the 100 as much as it does the 50 and the 200, so I just think it's extra noise, and I kind of removed it, but other people use it. For me personally, I don't. What I'm looking for is primarily when price is above the 50 period moving average, I'm going to be favoring bullish trades. When price is above the 50 period moving average and structure of the chart looks right, I will get involved. So for example, in this case here, we have this structure of consolidations going on, and you'll notice during this consolidation phase, price comes down near the 200 and bounces off of it, comes back up to this level of resistance we've seen before. Here, somebody could be trading in here, and they could say, okay, well, I've seen it fail at this level before, here. When it comes up here and does it again, you start seeing candlesticks that are showing the same kind of resistance, right? The wicks out of the top and so forth. then someone could sell this expecting price to move back down to the lower end of it. And that's perfectly fine, sound trading. There's nothing wrong with that. For me, I'm looking at this as just consolidation, and it's just moving back and forth, and I don't really see any directional impulsive move yet. I want to wait and stay out of it. Once you've got a close higher than you had in previous, you're starting to break out, or even a breakout and then a pullback, and you'll notice you're finding some support at those moving averages, those short-term moving averages, then you'd be a buyer there. That would make sense to me. That's how you would do that. You could also look at this and say, well, if we bounced off the 200 period before, maybe we bounce off the 200 period again, and so you'd be a buyer here. And it's kind of the same thing as using your 50 period moving average, you know, when you're bouncing off of that, but you're just using the 200 period. Regardless, however you spot it, you're just looking at the price action and where it's finding support and where it's finding resistance. You're trying to gather clues and figure out which direction do you want to be favoring. In this case here, you could have been a buyer expecting price to bounce back up to this level here, but you had no reason to expect price to break out yet. It was just, it hasn't happened any of this time. It could keep going. It could go on and on and on for quite a while before it broke in one direction or the other. So in this case, it would just be another one of these. You'd be a buyer here looking to sell the previous level of resistance. Regardless how you trade, that's basically what I'm doing. I'm looking at how price is behaving at certain levels, whether that's on the price action, I'm finding resistance levels, or supports on 200 period moving average or the 50 period moving average. Also, if I see price starting to break, like this 50 period moving average, the dotted blue line here, starting here, we're finding support at it where you might be a buyer here. This would make sense to be a buyer here, expecting, okay, well, we've pulled back, we've consolidated, we're going to eventually continue this uptrend. Maybe that might be an opportunity that you would take. And that's perfectly sound. In fact, I could draw a circle here and it ends up failing, but regardless, it would be a logical thing. The only reason why in this particular case I probably wouldn't do that is because I'd seen this move here, looked at it as a buy, and then it got stopped out, which would tell me that it stopped out, but it would tell me at some point in time, hey, you're in chop. That's what's happening here. So I wouldn't be looking to trade that again. I would probably trade this here personally, so I should probably draw a little red circle here, because certainly I would imagine that I would take this trade. The main thing here is that I'm trying to draw it here is that once price action starts to close below the 50 period and you see it whipping back on both sides of that, what it's doing is it is ignoring the 50 period moving average. It's no longer acting as support. Something's changing, and that change usually happens where you'll start to see it acting as resistance. And so that right there is where, what's wrong with that? That right there is when you would notice, hey, we're starting to find some resistance here. This looks like it's turning into a sell. And at that point in time, you'd want to be looking to sell as we're breaking down and we're going to have an impulse to the downside. And that's what this trade right here was. It was indicating that. And it's easy enough to pick up. You could see it. Another place, if you didn't catch this one, you could catch it over here. You see we come up to the 50 period and then we sell away from it. Maybe you don't catch this one because you didn't know what was going to happen until after it sold off. But definitely on the next one, you see we got a wick out of the top of this candle indicating that we had this sell pressure here. And again, we notice that we're falling away from the 50 period moving average and sloping down here. You can draw a little line like this, right? A little down slope there. So that's indicating, okay, this is an opportunity to get short and sell. So you either sell here or you sell here. Regardless, this is what we would expect. It's a perfectly logical move. If you missed this first phase here, you can see that we've taken out the previous low. It was over here. You got another opportunity to get short as we bounced here and we found resistance off those short-term moving averages and just started rolling over again, selling off. So you could sell from here to here. Again, I would expect to find some support at the 200 period moving average, which it does, and I would have exited my trade and been done with it. In this case here, you see price comes up and we don't fail at the 200, at the short-term moving average. We're not finding it difficult to close above it. We're not having any problem here, down here. Up here we are, and down here we're not. So we come through and we close above. That's indicating that you're trying to reverse this thing. And after a massive move to the downside, any impulsive move, I would expect a move in the opposite direction. That would make sense. And so once you can close above it, it's logical to say I'm going to take a long opportunity here with the stop off the low. That would make sense. In this particular case, it works out just fine. You did get some price action pullback here, and then closing back above those short-term moving averages. Again, showing short-term moving averages are still acting as support, and this would be another indication to you that we're trying to reverse here. Finally, we get a nice move to the upside. I think whether you got the wick or not, it's 100 and something points, pips, and then it closed up 50 pips, 52 pips, something like that. So in this particular case, that would have been, if you're using 50,000 size of the position, which I am in this case, that would be about $250 of profit right there. Another thing you could have done is after this sell-off here, you'll notice in this case we closed down below our moving averages here, and then this is something that you might be looking at, saying, okay, are we about to break down and go through here? You're just kind of looking for signals. What's the price action telling you? But then we whip back across and we close back above it again. So in this case, we're starting to show, wait a minute, this may not be over here. And you could have been a buyer here with the stop off the low. You could have done a lot of different things. In this case, we also sell back down, touch the 200, and then start to come up off that. And that would be indicating, hey, we're still finding support at that 200 period moving average. This is still a good entry opportunity down in this area here. Price action closed below your short-term moving averages, which is somewhat worrying. If you had been, let me shut this up. If you had been long this position right here, again, I wasn't. I was just looking at this in hindsight. The main thing here is that price action is showing that there is a support at this level down here, and we are looking at this as possibly, after this move here, a continuation to the upside. You would not want to be selling at this level if price is not able to get below a 200 period moving average at this point, because you're seeing that selling here is not showing strength on the sell side. It's, in fact, we're seeing strength on the bullish upside here, especially with these larger candles beside it. So you would expect to move to the upside. Price makes this big move. Maybe you make money on this trade. Maybe you missed it. The next time we pull back, what do we find? We find support in these moving averages. We just pull back into them and we're back out. At this point right here, you could be a buyer again. You're saying, okay, this was the first impulse, this is consolidation, and now you can see that we're breaking new high, close. We've got further to run before this is over. So you could be a buyer here with a stop off the low. Price makes a move to the upside. What do you make here? About 40 pips, so $200 right there. And how long did that take? Let's see, 7 hours and some time, roughly. Okay, 5 hours and 30 minutes to 7 hours and something, somewhere in that range. Here we get a close below the moving averages. That tells us that this impulsive move to the upside is over. We exit the position. Hey Christian, what if all of a sudden price, the next candle breaks to the upside and starts to move higher? We would re-enter the position, or you'd wait for a little consolidation before re-entering. Regardless, you would just close out your short position. But in this case here, you'd be a seller and it would work out just fine. Price moves back down. Advance your stop when you've got profit on the table, so that you either have a risk-free trade or that you have a small gain if in case something happens where you get stopped out. In this case, you could see the price action makes this big move to the upside and then pulls back down again. Depending on where your stop was at, you might have been stopped out. So if your stop was off the high, like your initial, you didn't advance the stop, you were fine. You just weathered it, stayed through it. A little bit of pain right here, but you were fine. If you advanced the stop, you either locked in a gain, a small gain, or you were stopped out at break even. Regardless, as price moves back down to this level here, notice the candlestick formation. We're getting a hammer candle again. Same thing we got kind of over here. Not exactly a hammer, but you know what I'm saying. It's showing the same kind of indication that we've pulled back, sold off, and then buyers came in and bought it back up. And you'll notice where that's happening, right here at that 50 period moving average. So in this case here, what we're going to do is we're going to recognize this as being bullish. We're going to say this is not showing favoritism to the bears. In fact, it's very bullish, and so you would be a buyer right there. Also, in these cases here, it's easy to get stopped out if your stop is too tight. My stop, I will show you in a minute. I have two basic stops. I have one that's a hard stop, and it's at the previous low. So I'll set a stop like this, right off the previous low, so that any kind of action like this doesn't stop me out. But if I start to see the chart breaking down below the 50 period moving average, closing below it, finding resistance at the 50, I can just close the position. I don't need to wait for my hard stop to get hit. You understand what I'm saying? So I have a soft stop where I'm watching price action, and then I have a hard stop where if all of a sudden there's a massive move in the market and price just drops, I want to be out. I don't want to be holding and waiting for something to come back and all that kind of thing. So just the way I'm trading right now, that's how I'm doing it. In this case, again, pretty obvious bullish opportunity. Entry period of this candle, when it moved lower, would have been concerning. You would have been watching and saying, hey, this is not the right direction. But then as it started to get bid back up, you would recognize, okay, this is just a long wick candle. It's not going to be any problem here. We're still seeing strength. We're still closing above the 50 period moving average. Everything's good. So you get another nice move to the upside. What do you have? Roughly 75 pips in about 5.5 hours. Pretty nice move to the upside. Again, you could stay with it until you think you got the top of it. Once you see it rolling over, you could exit. Once you see it close below the short-term moving averages, you could exit. That's definitely where you'd want to exit. And again, you could, after a move to the upside, reverse and say, I'm going to sell this. But again, our overall trend, price is still above the 50 period moving average. So we're looking at a very short-term sell side. You would definitely be looking to close the position at the 50 because there's no signal here that it's time to go bearish. It's actually finding support at that 50 period moving average still. And so that you would want to be buying here, not selling. And so you would close your short position. You only made a little bit on that one. What was it? Maybe 20 pips if you're lucky. So $100 there if you were using a $50,000 lot size. And then again, you get another opportunity here. This is why you don't want that tight stop. If you have this tight stop right here, let's say right off the low, right? You got in, price makes the move to the upside, and you advance your stop real tight. The very next little pullback here would kick you out, and then price would just keep going higher. So that's not any fun. The same thing would have happened here. So that's why I don't keep really tight stops in that case. I keep a stop. In this case, my stop would have been off this low. I would have been buying here and here, and my stop would be down here. And if I saw price close below the 50 and start finding resistance at it, I might just close the position out and clear the stop. But there's no sense in having it right there, kicking you out in this situation right here. We had a move to the downside and then started to find that support again. So no reason to get shook out for no reason. And again, nice move to the upside. What do we make here? Impulsive move. You got some sell signals here on this candle here, and then you get pulling back into, rolling over and pulling back into those moving averages. How you set your stop at this point in time, I'd be advancing my stop to lock in some gain, or at least make sure that I don't have a loss that doesn't work, doesn't break down, and then I end up with a loss. In this case here, you're at about 75 pips. It's a pretty nice move to the upside. And then in this case here, you've had a massive move to the downside. In this case here, I don't think I would enter this on the sell side. Reason being, it's a big candle to the downside, and I'm still above the 50 period moving average, but not far away from it. So for me, if I were to enter right here as a sell, I would be looking at this is my gain potential, and this is my loss potential. I don't like that risk reward ratio, so I would steer clear of that on the sell side. In this case here, we do pull back to roughly the 50 period moving average, and that's where you want to be a buyer. You could also buy off this close above that short-term moving averages, but again, that's the same kind of problem I've talked to you guys about before, where in the consolidation phase you can get that chop where you get signals in both directions. That's one of those details that I have changed. Now I look to buy off of the moving averages, the 50 or the 200. It doesn't have to be exact. It can just be near it, and I'll say, okay, well, that's close enough for me. Like, for example, over here, if I get a candle that comes down and stops here, and the next candle starts to move higher, I might just say, you know what, I'm going to buy this. It doesn't have to touch for me to get involved. Again, here we don't even get a touch. We just get close to it, and then we bounce off of it. And right now it's still bullish. You'd still be holding. Price is still respecting that 50 period moving average, staying above it. If that were to change, then I would change. But right now, there's no reason to change. My stop here on this trade, because I am actually in this trade, is here. If price comes down and automatically, Sunday, Monday morning breaks through it, I'm out. But if price just comes down and touches this a little bit, maybe gets this long doji or something, I want to stay involved. So that's what's going on there, and that's what I'm doing, and that's why I'm doing it. Sell side's going to be exactly the same thing. You're just going to see the chart telling you, hey, we're in a downtrend. We're finding resistance at the short-term moving averages. You can keep getting involved and that kind of thing. Or you're going to find resistance at the 50 period or the 200 period or whatever it is that's showing up. And then we would sell, and that would be how we're making our money on that. That's basic overview of what I'm doing, and I will be walking you guys through, real trades as they happen in the future. I guess that's about it. Just wanted to share that with you guys. This is the model I'm using at this moment, and the why. I can make a lot more trading here than I can make working for Walmart or something like that. So this is what I'm doing. Okay. God bless. Take care, and I'll see you in the next one.